Hello, everyone, and welcome to ESG Matters. Today, we examine two major developments in Japan's sustainability and finance landscape. First, we explore Japan's approach to transition finance, where the country has taken a notable step with the issuance of the world's first sovereign transition bond. This move is part of a national strategy to fund industrial decarbonization, with Japan playing a key role in the global transition bond market. Hideki Takada, Finance and Sustainability Director at the GX Acceleration Agency, shares insights on how transition bonds differ from green bonds and their role in long-term carbon reduction. Next, we look at Japan's broader green transformation, GX, initiative. As the GX Acceleration Agency mobilizes over 150 trillion Japanese yen in public and private investments toward decarbonization. The newly formed Global Advisory Council, featuring recognized experts in sustainable finance and carbon markets, is set to integrate international best practices and shape Japan's sustainability policies for the next decade. Stay with us.
First, let's take a closer look at Japan's approach to transition finance through the insights of Hideki Takada, Finance and Sustainability Director at the GX Acceleration Agency. According to Takada, the future of sustainable finance hinges on clearly distinguishing transition bonds from green bonds, ensuring that investors understand their role in supporting gradual emissions reductions rather than just funding immediately green projects. Takada explains that while green bonds are dedicated exclusively to environmentally friendly projects, transition bonds are designed to support industries in transition, those that are still dependent on carbon-intensive processes but are actively working to decarbonize. Transparency is key, he says. By maintaining a clear distinction, Japan is ensuring that green bonds remain strictly for fully green projects, while transition bonds provide structured support for industries that need time to decarbonize. Japan has taken a notable step in transition finance by issuing the world's first sovereign transition bond, the Climate Transition Bond, CTB, in 2024. This first-of-its-kind move is part of the country's Green Transformation (GX) plan, a national strategy to accelerate industrial decarbonization. The launch of the GX Acceleration Agency in June 2024 further reinforces Japan's commitment to transition finance, with a focus on mobilizing investment to reduce emissions across hard-to-abate industries. The impact of these initiatives is becoming evident. In 2024, Japan led the global transition bond market, issuing over $20 billion, quadrupling the previous record set in 2021. Major corporations such as Japan Airlines, Hokkaido Electric Power, and Mazda Motor Corporation have become key issuers, demonstrating how transition bonds can be utilized to fund decarbonization efforts in diverse sectors. Internationally, transition finance is gaining momentum. Initially met with skepticism, it is now under consideration in the EU taxonomy and the UK's Sustainable Finance Framework. Several Asian nations are also integrating transition bonds into their sustainability strategies. However, Takada acknowledges the barriers to broader acceptance, noting that many investors still prefer green bonds or sustainability-linked bonds, SLBs, due to their established credibility. We need to continue building confidence in transition bonds, he emphasizes. These instruments play a role in facilitating industry-wide decarbonization, and investors must recognize their role in achieving net zero goals. Takada also highlights the key differences between transition bonds and SLBs. While SLBs allow flexibility in meeting company-specific sustainability targets, they have faced questions regarding their effectiveness, particularly due to their complex target-setting mechanisms. Transition bonds, on the other hand, are designed with stricter requirements, requiring companies to demonstrate continuous progress toward decarbonization rather than just committing to broad sustainability objectives. Looking ahead, Japan is advocating for global acceptance of transition bonds as a distinct and necessary financial instrument. In 2023, the government released guidelines to help financial institutions engage effectively with issuers, ensuring that investors have clear information in transition finance. We're not just talking about financing projects, Takata explains. We're financing entire industries through their decarbonization journey. The broader implication? Japan's structured approach to transition finance contributes to the conversation on sustainable investing. As the world works toward defining and regulating transition bonds, Japan's structured model provides a reference point for integrating accountability and innovation into sustainable investments. Now, we'd love to hear from you. Should transition bonds remain a distinct category from green bonds, or should they be combined? What role do you see transition finance playing in your country's decarbonization strategy? Comment down below and let us know your thoughts.
Next, let's take a closer look at Japan's latest move to accelerate its green transformation, or GX. The GX Acceleration Agency, launched in July 2024, is spearheading an extensive effort to mobilize over 150 trillion Japanese yen in public and private sector investments toward decarbonization and sustainability over the next decade. To reinforce global cooperation and enhance policy development, the agency has now established the Global Advisory Council, bringing together recognized experts in sustainable finance, impact investing, and carbon markets. This council will contribute to shaping Japan's GX policies while integrating international best practices. The council will support GX investments through mechanisms such as debt guarantees and the carbon pricing system, set to launch in the financial year 2026. Additionally, it will serve as a global hub for GX-related knowledge, fostering cooperation between industry, finance, government, local authorities, and research institutions. The Global Advisory Council includes several key professionals in sustainable finance, including Amit Bori, CEO and co-founder of the Global Impact Investing Network, GIIN, Nicholas Pfaff, Deputy CEO and Head of Sustainable Finance at the International Capital Market Association, ICMA, Robert Youngman, Team Leader for Green Finance and Investment at the OECD, Sean Kidney, CEO of the Climate Bonds Initiative, Sherry Madeira, CEO of CDP Worldwide. These experts will advise on Japan's GX policies, bringing insights from their global networks to strengthen international communication and investment in Japan's sustainability initiatives. The establishment of this council has significant implications. First, it will support policy integration, ensuring Japan's carbon markets, green bonds, and impact investment strategies align with international standards. Second, it strengthens Japan's role in sustainable finance, positioning the country as a participant in promoting climate-related investment. And third, it enhances stakeholder engagement, bridging the gap between government, private sector actors, and international institutions to accelerate decarbonization efforts. Globally, the formation of the Global Advisory Council reflects Japan's commitment to advancing efforts in GX strategies. By integrating insights from various experts, Japan aims to align its green transformation with international sustainability trends while attracting investment in its green economy. We'd love to hear your thoughts. What aspect of GX, green transformation, do you think is most critical for global sustainability? How can international collaboration accelerate the transition to a greener economy? Thank you for joining us. Stay tuned for more updates on how global partnerships are shaping the future of sustainable investment and climate action.